Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday market webcast. Okay, it's about 7:25 Eastern time as I'm doing this. We got CPI in about a little more than an hour. That's going to shake things up, obviously. I'm back on the desk today. I was traveling a little bit this week. So what we've got here and what we've seen since back on the 4th, so little less than a week, is a lot of violent moves, a lot of rejections up and down that have all kind of jammed into this range, but for the most part residing underneath the 9-day, which is your blue line, and the 20-day, which is the green line. It's not come down to completely interact with the lower Bollinger Band, which, I would expect, considering the amount of time that's been spent below the middle band. You can see on the hourly chart that, with the exception of some violent moves here and there, you had that Thursday sell-off later in the day. You've got jobs here, which was a bit of a move, but it wasn't anything epic. You had a big move down yesterday morning, not exactly off the open, but in and around 10 o'clock and the 11 o'clock hour, which really had a chance to run all the way back to 51.41. Bears did not take advantage of that. You had these tight bands. They head faked it to the upside. They started to drive it down. All you really needed was one more lower low on an hourly candle, and it would have opened up a test of these lows here. They didn't get it done. And what we see at times is when there's a covering pop, and this is just profit taking down here. It's nothing newsworthy, nothing epic, people just taking profits. Where bears get themselves into trouble is not on the initial pop, but it's when it comes back in and starts settling in for higher lows, and then you lose this one. Now, they haven't really punished them for it. They ripped it up into the close, and then we've been flatlining. Why? Because we've got CPI at 8:30, and everybody wants to see what that is before they put money to work in any number of underlying stocks. So we'll see what 8:30 does. My feeling is it's going to stay choppy into this news. Depending on how it goes, you could get a big move. I've told you guys for over 10 years, don't try to game these things. Don't game jobs. Don't game the Fed. And in our current inflationary environment where CPI has become very important, don't try to game this either. Trying to game econ before econ hits is a very dangerous situation. And the reality of it is, if you're right, you'll take the trade for a little bit. You'll make some money. You won't make great money because your feeling the whole time is that, look, I didn't get caught with my hand in the cookie jar. Let me get out of this thing. Gosh, it's moving really fast. The whole deal. If you're wrong, the chances of you turning that trade into a very big mistake, multi-day, multi-week mistake on your account on something that wants to run is really good, because the whole premise of the trade is trying to be correct, imposing your thoughts on price ahead of a big announcement, and you will add and add and add as the thing goes against you, because you want to be proven right, and it's more important than losing money, and it certainly was more important than making money. So stay away from trying to game things into big announcements. Okay, but what I will tell you is this: if the reaction in the run is to the upside, you got to deal with the roundy, you got to deal with the highs from back on Thursday, and then can you close it above 5,300 and start to look at 33? That's your job for the rest of the week, bulls. If this is your time and you get this right. If you're the bears, yesterday's low has to go today. You can get down into here, and then you have to take a very serious look at the lower Bollinger Band. Let me pull that chart up one more time. you've got to engage down here on this lower band, which, 51.89, 51.90. If you test the Thursday lows, it'll basically be a de facto test of that lower band, which in the bigger picture brings us into a lot healthier two-sided market than what we've seen over the last 4 or 5 months. Look, I make fun of the bears, and and they deserve to be made fun of, but it's a healthier market when we're trading upper band, middle band, lower band than just gliding here between the middle band and the upper band all the time. You can just see with the naked eye, you can see that these moves get truncated, and the tape gets nervous as it gets into the upper band, and then things chop and turn and do other stuff. So it's an okay trading market, but it's not a great trading market. Great trading markets trade between the bands, and it's a lot wider ranges. Day traders can get involved, position traders can get involved. There's it's just a very good tape for everybody, regardless of your time frames. So we'll see. But look, I would play it pretty close to the vest going into CPI. We've got a long working that we put on yesterday afternoon that we have a runner left on that we haven't even a stop at our entry on. If that gets clipped off the announcement, that's fine. We had we've made our number for the week, made our number for the day. If that rides to the upside, or if we need to get short, we'll get rid of that. But normally I'm flat heading into these things, and I may still be flat heading into this depending on how it trades. I may just want to take profit, but that's one thing for the subscribers that we have to think about in the course of the next 50 minutes or so. All right, everybody have a fantastic day. Be safe, be healthy, take care, trade them well. I will talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.